Good morning, everybody. How's everyone doing? Tuesday, October 18th. Today is the day. Today is the day of what, you might ask? Well, we're gapping up. So are we going to get some direction on this market is something that we've got to consider on today's session. Will the market finally resolve in one direction or another? We will find out here. But some interesting things are taking place across the entirety of the market. So some decent setups out there this morning. Some interesting gaps to be dealing with, so let's dive into it. First up, of course, we've got the economic calendar. Anything interesting here? Nah, not really. Today's a quiet day. Nothing. Wednesday, tomorrow, at 6:30 in the afternoon, Bullard will be speaking, so no big deal there. And then Thursday, Philly Fed Manufacturing Index and the unemployment claims as always. So pretty tame week after what we saw last week, of course. We talked about that yesterday, and if we do want to take a quick fast forward to next week, that's where it heats back up again. Pretty busy next week. Advanced GDP quarter over quarter coming in on Thursday and PCE on Friday, right? Big deal. So that's what we've got on the economic calendar. But for this week, just to rehash here, pretty quiet day today. Nothing should be coming out as a surprise. No big announcements. Seems pretty tame. Continuing over to our stock-specific headlines. What is CNBC telling us this morning? Goldman CEO David Solomon says there's a good chance of a recession, and so it's time to be cautious. Interesting. We'll see what the market ultimately has to tell us, but market's sitting on the lows. So if there ever were a decent risk-reward, entry in the market, it's not buying at all-time highs. It's kind of buying now and continuing to dollar cost average in. So again, just as a quick reminder for anyone who doesn't have, for anyone who's possibly got a 20 plus time year horizon, it's my personal belief, and you can do whatever you want with your money, that you should be, setting some money aside for retirement or to live a comfortable life later on in your years. So people with 20 plus time horizons, I think that it's a great time to be slowly dollar cost averaging in to the S&P, to like VOO, things of that nature. But, if you've got alternate investments, if you want to invest in a business and you're putting your money into a business and you're in control of the revenue, the income, then that's a decent bet on yourself as well. So doing something anyways. So I basically just want to say, sure, you're getting these fear-mongering headlines that say recession, be cautious, don't buy yet. And it's like, well, now's a pretty decent time to start. We've got bigger issues if the market goes to zero. So anyways, that's my spiel for the morning. Dow futures jumped 500 points. Yes, we know that we're dealing with a gap up. Facebook parent Meta admits defeat after $400 million Giphy deal blocked by the UK regulators. Interesting. I didn't even know that deal was going on in the background. Interesting. What else? Hasbro revenue meets expectation, but earnings miss as inflation squeezes shoppers. Carvana downgraded by Wedbush. Okay. Microsoft confirms job cuts after calling for growth to slow. So some pretty bearish headlines. The first three are pretty big deals. Caraway to sell cookware in Target stores. Big for the brick and mortar push. What else? Biggest movers pre-market are seemingly earnings candidates. Johnson & Johnson, Goldman Sachs, Fubo, Hasbro there with that headline we saw earlier as well. What else? An upgrade to some bioenergy play, but it's a pro article, so we're not going to look at that. Let's see. Upgrade to Target from Jefferies for a rally of 20%. Nice. So some decent stock-specific headlines out there this morning. Apple reportedly set to launch new iPad Pro tablets in coming days. Let's see. Bargain retailer TJX strategically placed to navigate a recession from JP Morgan. So not a outright upgrade, but definitely, positive words of encouragement there. Let's see. Chinese EV backed by Buffett pops 5%. That's it for now. But overall, a pretty decent morning in terms of stock-specific headlines. Usually we're dealing with a bunch of political nonsense, and, there was some of that mixed in there, but for the most part, we've got Hasbro missing on missing on earnings. Meets expectation, but earnings miss. Okay, there you go. Carvana downgrade. Microsoft jobs cut. Target upgrade. Where were you? Somewhere in here. Jeffries, target upgrade, right? So some decent stuff. And then TJX, also from JP Morgan, a not so explicit upgrade. So pretty cool, pretty cool. Let's take a look at the earnings calendar and see who we've got on tap here. Goldman Sachs obviously reported. Johnson & Johnson. There's that Hasbro from the headlines, and that's it. Netflix will be a top watch after the close. United could be as well. After that, on Wednesday, P&G is fairly important. Maybe Abbott Laboratories if you're into the XLV. And then we've got Tesla, big bad Tesla after the close Wednesday. IBM might be a watch as well, and Alcoa if you're into the materials sector. Before the open on Thursday, airlines, maybe AT&T because it's such a large dividend stock. And let's see, Snap after the close just to continue to give us some insight into the tech world. CSX is it's an okay trader. Verizon, kind of similar to AT&T, big dividend stock, so you might want to watch that one. American Express is a decent trader as well. So that's where my eyes are at for earnings. Again, just to sum it up, on today's session, Netflix is the headliner, if you will, after the close. So we'll keep an eye on that. Let's get on over to the platform here and see what's going on from this perspective. Let's maximize those ES futures and go to a 4-hour chart to start. And before we start talking about where we are from a structural perspective, let me quickly see who's in the chat here this morning. Who do we got? Going up to the top, Nick Farrell, thank you so much for kicking us off this morning. Good morning to you. INF, Nancy, Christina Ann, Cy, Tri Trader, Small Good Decisions, Ross, Live Better, Suresh, Jake C. We've got Roger Tutt, Crystal, Swipe, The Sandman, Jay Hicks, Buckminster Wallace, Quick. We've got Stevie J, Luis, Big Sticks, Sharath, good to see you. Good to see you. We've got Siege, New to Stock, Jay Yachts. We've got Son of the Sun. We've got October, Rolando, Plant-Based Will, good morning. Armin, Tarushi, Josiah, King Bob, Fancy A, Todd A, Ramona, Lawrence. We've got Rug Pull, Bill, Uzoma, G Money, Scalp Daddy Dollars in the building. Pete and Repeat, Paul Mayer, Gregory Rulo, good morning, sir. Good thing I went long at the close yesterday. Good for you, Greg. Hopefully you've got a nice winner on your hands this morning. Great gap up. M-Power, Jeffrey Hoyos, Mudaman, Mr. Oso, Icy Pro Jake, Leaf Floating on a Lake, Playmaker, Big Stick, we got you. Jonathan Fitzka, Kyle Stearns, good morning. Mickey, LeBron, M. Spears, Ty, Jay with the Gold Cash Bag, Stargazer. I think we've got everybody with the green names. And if I missed you, just get in here early and say something early. I'll probably get you next time. So good morning to everybody. Thank you for tuning in. Let's dive into the ES futures here on the higher time frame structures and start to dissect what's unfolding. So 4-hour chart, right? Let us quickly just remember, we're going to go through a couple of different perspectives here this morning. Let us quickly remember that we can count high, lower high, lower high. Technically speaking, this could turn into a lower high here this morning if we fade immediately off the open and move lower. It could be a possibility. It could be a lower high underneath what we have right here. I'm not saying that will happen, but I'm saying it is a possibility. It's something to consider. The 4-hour structure has not yet shifted to the degree that we are above this prior big pivot high, right? You could make the argument that from here to here, we've got a higher high, but I would look at something like the hourly chart and say, okay, the hourly chart is probably saying much more of an uptrend as opposed to the 4-hour chart. 4-hour can still be in a downtrend based on this, and again, if we fade off of the open, that can produce a lower high and preserve the 4-hour downtrend, okay? So it's a possibility, but not a guarantee. So you've got competing time frames here. 4-hour looking to possibly put in a lower high. If we look at the hourly chart, though, what we'll notice on the hourly chart is that this is kind of already in an uptrend, right? We've got low, higher, high, higher, high. I would definitely consider this more of an hourly uptrend than a 4-hour trend change. That's for sure, right? This, to me, is still the 4-hour hang-up. Anyways, on the hourly chart, so a smaller time frame here, we are in a new uptrend. We've got the higher high, we've got the higher low. That confirms it. So if we see a pullback, the hourly trend can remain in the upward direction if we pull back and close or get some sort of bounce, gap fill reversal off of the prior high of day. Would that not be a beautiful place for a higher low to be put in on the chart? I'm not saying it will happen beautifully that way, but it's a possibility and something to consider here on the hourly structure. So if the trend is going to remain up on the hourly, I would say a critical level we don't really want to fall back down underneath would just be the gap close area right around in here, because that's also just about the highs of the Friday rally, or excuse me, the Thursday rally from CPI, right? So as long as we hold up above the gap close today, put in a gap close reversal, something that looks like this, hourly chart's looking good for a trend reversal to the upside. All it would take then is an equal high on the 4-hour. We neutralize the 4-hour trend, so this goes to neutral instead of down. Hourly would be bullish, of course, and then your intraday timeframes, those can kind of be all over the place. You get pullbacks, rallies, so on and so forth, but any kind of bullish rallies on the intraday should be playable to the upside. You've got a neutral 4-hour, a bullish 1-hour. Intraday, you can start to look for those moves to the upside, right? So that's how the trend could possibly reverse here on the ES. Now, if we just see massive continuation here out of the gates, let's talk about the scenario where we don't pull back first. So if this does not happen and we do not get the higher low here, then fine. What we need to do is neutralize the 4-hour and see continuation directly into these highs. That would strike me as a bullish look as well, because now you're taking care of the 4-hour and giving ourselves even more of a runway for a higher low pullback on the hourly, and we're all set. Right? So if the trend is going to reverse here today, a couple of things need to happen. Number one, got to get continuation for the equal high into this area here. I'll give you the numbers, roughly up towards 3,800. 3,805, 3,813, somewhere in this zone from the ES. Okay, so if we get continuation to the upside, that's the target we want to see hit to neutralize the 4-hour trend. If we see a pullback, we want to see a gap close reversal, gap fill reversal, off the prior high of day, roughly 3,700. 3,700, right? So those are the perspectives from the 4-hour and the hourly. Let's take a look at the 15-minute time frame and talk about what we've got on tap for this morning session. So big yellow bar directly across the screen, that represents a gap. I'm just going to grab a couple more days here. So the big yellow bar directly across the top of the screen represents a gap. Remember that gaps do not technically count as being filled unless you move through them in the regular trading hours session. So this gap is still open, and obviously we're opening on a gap from here to here. So a double gap is going to exist in this range where that yellow bar is. Not a whole lot of structure in that area. I would carry that forward as important. And now with that being said, let's dive into our 3 questions, right? Now that we've got a little bit more context as to what is what here on the chart. Here we go. And I suppose also, more context. Sorry. More context. This is important. So this is the 4-hour chart. We just went back up to a higher time frame. This is the daily balance area on the ES, right? What are we doing? We're poking over the top of the balance. So again, why would it be ideal to give ourselves a gap fill reversal? Because ideally it happens above the top of the balance area in here. But even a gap fill reversal keeps us in the upper third of that daily balance. Okay? So if we close the yellow box, if we fill the yellow box and do something like this, that is still bullish, right? It doesn't have to come all the way to here. That would be another thing to watch out for based on the daily balance structure that looks something like this. Okay? So that is also a higher time frame perspective for context. But now let's go back to the 15 and let's talk about our 3 questions. All right, so now that we know that, now that we kind of know where we're at from a structural perspective on the higher time frames, here we go. Question number 1, where are we opening in relationship to the prior day's range? Obviously, we got massive range compression yesterday, big inside day, balance day yesterday. We're opening on a big gap up. So big up arrow for question number 1, true gap up, outside of range. Question number 2, where are we opening in relationship to the overnight range? We're opening smack on the overnight highs, at least currently, and pretty far away from the overnight low. So knowing that, that is also a bullish indication, but more importantly, it sets up decent risk reward if we're going to get a gap fade. Question number 3, last but certainly not least, what is the overnight inventory position, net long, net short? Here's the settlement from the prior day's session, 100% net long inventory. 100% net long. There was no activity underneath the settlement print from the prior day's session. So what do the 3 questions tell us about this morning's open? What should we be watching out for? Well, question number 1 tells us that yes, there will be shock and awe this morning. There is a true gap up. People who went out long, like Gregory Rouleau, are feeling like, oh goodness, I've got all this profit to deal with right now. Almost, it's not quite a 100-point gap up, but my goodness, pretty darn close, right? 70 points. 70-point gap up, am I going to take some profit? Am I going to add to the trade? I've got to do something, right? So those folks are waking up feeling fantastic. Anyone who went out short yesterday afternoon, they're, totally underwater. Totally underwater. So they've got to do something as well. So question number 1 would indicate that, yes, we've got some knee-jerk reactions to deal with on the open. We've got some shock and awe. There's something to do closer to 9:30 as opposed to later. Okay. So that's question 1. Question 2, again, good risk reward here for the gap rules to unfold. Because we're so close to the overnight high, our risk reward is in check for the gap rules and putting a stop directly over the top, or a failure above the overnight high. We'll talk about gap rules in just a second, but last but not least, question number 3, 100% net long inventory. Of course, if there's going to be some correction to that, it would make sense that because inventory is 100% net long, you could see the correction in the first place. So everything here adds up to me that gap rules will be in play. Now, what are the gap rules, you might ask? Good thing you did ask. Here we go. Let's quickly adjust, actually, our overnight high to be a little bit more accurate. There we go. So here they are. Here are the gap rules, and I'm also going to turn off these bubbles. We don't want the high-low bubbles. Let's get rid of that. Good. So here we go. If we open here and fail to accept above the overnight high and then start trading lower underneath the opening print, you are looking for a fade to move lower in the ES. Now, you might be saying, it's a massive gap up. Why would you even consider shorting this? Well, good point. There is some decent relative strength out there. Right? Obviously, you don't want to be too aggressive in the opposite direction. So if you're not comfortable with taking this, if you're not disciplined enough to use a tight stop and recognize the risk reward here, right? Boom, boom. Risk reward checks out. Makes sense. But if you're not disciplined enough to stick to that, or if you just think that this idea is crazy in the first place, you do not have to take the short trade. All you have to do is you have to recognize that it would at least be reasonable for some of the market inventory to correct and come closer to the prior high of day. All right, so what do we mean by that? Here we go. Well, look at all these people in the pre-market who saw this. Boom. Okay, now we're getting pullbacks, right? Let's buy it, buy it, buy it, buy it, buy it, buy. And then look at I'd say that the volume is pretty much, ever since that big rally happened in here, the volume's been kind of level. But volume is slightly ramping as we get closer to these highs. What does that mean? It just means that more people have positions closer to here as opposed to here or here, right, on these pullback lows and are feeling good. So the more people we can get stuck long at the overnight highs, basically, the higher the odds are that if we get some sort of retracement back through an opening print or just fail to break out over the overnight high, those longs are feeling like, oh man, I kind of got trapped buying at the top. And to some degree, yeah, they did, right? So if they start to close out, that's what drives the inventory correction in the opposite direction. And then these people, as they go underwater, they start selling, and that drives it lower, right? And you get this ripple effect. I'm not saying that it's going to cause a complete gap fill, because yes, we do have a very sizable gap up, but those are the gap rules. That's the psychology of why it works in the first place. You get longs late to the party who don't get the follow through they're looking for. Everybody in the overnight session can roughly be categorized as a short-term discretionary trader. This is not JP Morgan. This is not Morgan Stanley or Goldman Sachs trading between 5 and 8 in the morning in the ES futures. It just doesn't happen, right? What do? They wait until the market opens where there's a lot more liquidity, right? So that's the psychology of why this works. But before we just say, okay, that's it, smack it short on the open, that's not what I'm saying. I didn't say that, did I? I didn't say that. I said if we fail to hold over the overnight high, and if we trade lower through the opening print, maybe there's some inventory correction that takes place. If we accept above the overnight high, there's no short. Let me be pretty clear about that as well, right? There's no short if we're accepting above the overnight high. If we never fade back through the open, there's no short. The other thing to point out, and I've talked about this on the stream multiple times, is that whenever we're dealing with a gap that's north or south, in the case of a gap down, of 20 points in the ES, it can be very difficult to trade. Sometimes it just doesn't do anything. The market digests. It goes sideways, right? It's a possibility. So again, this all comes back down to the message of Sunday's video, which is to manage your expectations, stay flexible, and not be married to any particular idea in this marketplace. Everybody and their brother was bearish for the past, 2 weeks. The CPI print gap down, everybody was like, oh, why didn't the market stay down there? Why are we rallying? What's going on here? Well, now if everybody gets bullish, you just continue to get these whipsaw back and forth and back and forth and back and forth. There's this pretty, I don't know if it's famous or just well-regarded quote, but, when everybody seemingly thinks to know the outcome of an unknown future, that's usually where things get quite dangerous. Okay? So that's all I'm saying about the open here. Be cautious. Use some, keep your expectations in check, I suppose, right? And it's been that way in this market for quite some time. If this gap was a 20-point gap, or if it was like a 15-point gap, I would say absolutely, we're looking to fade the gap, right? That's just how it goes. 15-point gap up, sure, we're looking to fade that in here. We're looking for it to come back in and then possibly reverse off of it. Because the gap is quite literally 75 points now, I mean, it just complicates things, right? It complicates things when you're dealing with a gap so large here. So to tie it all together, some scenarios here for the open. We know that if the market pulls back and we start to get some of the gap fade, it would be ideal. It would be a picture-perfect rainbows and butterfly world if we close this yellow bar, which is also the top of the daily balance, and then reverse off of it. So what would be the level you would want to see hold? It's this pullback low from the pre-market and the gap close area around 37.25. 37.25 would be the first level of pullback that I would want to see for a, quote unquote gap fill reversal. That's the yellow bar gap. We would, of course, still have this remaining as a gap as well. Put a G here. So that's rainbows and butterflies. Pullback, some fade activity takes place on the open. Might look something like this, right? We do this, boom, fade off of that. Decent look here. So 37.25. That would be a reasonable pullback area if we get some gap fill in the first place. This would also be a partial gap fill. So let's talk about the psychology of that, right? Well, if we don't fill the gap all the way, technically sellers are not doing their job. We've got relatively thin structure in here, right? So if sellers aren't doing their job, we can say, all right, maybe the buyers are strong or sellers just aren't willing to initiate new positions here, so we can move higher, right? So a partial gap fill also does strike me as a bullish indication. Not only would it be preserving the hourly uptrend, it would be sort of starting to confirm the possibility of a 4-hour trend change, and we've also got weak sellers. So 37.25. 37.25 would be a level that I carry forward. 37.25. All right, that is partial gap fill area. Another scenario would be, okay, we get the gap fill situation, but we close the gap all the way. That still preserves the hourly uptrend. It's still bullish if we move to here, close the gap, and then reverse off of it. It's not bullish if we fall back down into range, obviously. That's a different story. But if we hold up at 3,700 roughly, the prior high of day, it's also bullish on the hourly structure, right? So that makes sense. That's a possible scenario. And then I would say that, the market doing something like that, that's, again, a 75-point drawdown on today's session. To move 75 points to the downside, I don't know that it would just continue here. So, I suppose lines in the sand would definitely be the value area low from the prior day's session. Now we're talking about, what would that be? A 90-point move to the downside, right? 90 points to the downside if we get to here. I don't know that the market wants to move that far on today's session. There's no economic data catalyst. There's nothing of the sort. So it doesn't strike me that that's a reasonable expectation. And again, our minds are being warped by the massive ranges that the market's been traveling recently. So I don't think that the market goes here, but that would definitely be a line in the sand to the downside. Value area low must hold. There's no ifs, ands, or buts about that one. That's 36.8425. 36.8425. Just as like a worst case scenario, that's where I would be eyeballing for a hold, but I don't necessarily know that the market makes it there in the first place. Okay? And then the bullish scenario, I'm sure the one that most people are like, oh, it's gapping up, it's got to go higher. All right, I'll give credit where credit is due. If the buyers can do something like this, early morning push, consolidation above the overnight high, maybe we just dribble up and drift into that 3,800 target up here, 38.05, remember? 38.05 from the higher time frame structure. So that's your upside target if we do get the drift higher. Okay? And what would that do, right? Let's think about this from the higher time frame perspective. 4-hour trend would be neutralized if we make the move into this area. Hourly trend would certainly have plenty of runway for a higher low pullback, and we can continue on our merry way. So most outcomes this morning do look slightly more bullish than bearish, but obviously as traders, we can take advantage of the move to the downside to get to the bottom of the yellow box, to the prior high of day. Those are reasonable trades to be looking at, okay? So that's what I've got for you in the ES here on this morning's session. Before we move to the NQ, let me give you the internals rundown, and we'll discuss what it would take for the gap to close, all right? So here we go. The most important thing, let's just go in order of importance. The most important thing, if this gap is going to close, you need to watch your ticks. It's very likely that the market opens up on some insane read up here, kind of on par with what we saw yesterday, north of 1500. If the gap is going to close, we've got to get at least to the 1,000 mark, preferably the zero line. If the market can't get to the zero line, if the tick here can't get to the zero line and the market's just holding up at the highs, it's going sideways, and the tick is doing something like this and just playing around above, 1,000, maybe it's even above 500, the gap will not fill. The gap will not fill unless the tick makes it to the zero line, okay? So tick needs to go to zero. If that doesn't happen, don't look to be aggressive on the short side for the gap close. Next important is going to be the breadth. Breadth, right up here, top left-hand corner, these two boxes. They are likely going to open on some kind of read that is... echo on the mic. Echo on the mic. Two mics open. Interesting. I do see them moving out of sync on my little... Gone? Yeah, okay, good. Good. All right, cool. So anyways, back to the breaths. They're likely going to open on some gigantic read, like 20 to 1 positive, okay? 20 to 1 positive or something on the NYSE. NASDAQ might lag a little bit, but regardless, it's going to be very bullish. So if those breaths stay at 20 to 1, if they get even better than 20 to 1, if they go 30, if they go 35, if they go 50, then it's going to not close the gap, right? We are not going to fade the gap if these breath readings get more and more bullish. If they fade from 20 to 1 down to something like 3 to 1, and then 2 to 1, and then even, preferably 1 to 1, then yeah, the gap might have a reasonable chance to fade to the downside. So these are the two most important things. Advanced decline line moves like a snail. It's likely going to open somewhere up here, and it might fade off during the day, but if it just holds sideways, it's not going to give us an early morning indication. Nothing really impressive to do from that perspective. All right, so that is the ES. Let's go ahead and take a quick poll and see what the chat thinks is going to happen on today's session. So if you're a bull and you think that the market is going to move higher, if you think we're going to get a rally for a push, consolidation, bull flag, and move to neutralize the 4-hour chart. So 4-hour gets neutralized in situation number 1. Drop us a number 1 in the chat. If you're a little bit more neutral, thinking that we might go a little higher, dribble a little bit lower, partial gap fill, sideways, not really an inside day, but compressed range up here, drop us a number 2 in the chat. No clean trend on the day is basically what a number 2 is. And a number 3 is, okay, fail to move higher over the overnight high, move to close the full gap, lower high, and possibly close the day back down within range. So that's an option number 3 on today's session. If you have no idea what's going to happen on today's session, go ahead and drop us a number 4 in the chat. That would just indicate that you don't have a situational bias, which is all right. Let me fire it up as the official YouTube poll, and we'll go from there. Start a poll. Good. What do you think? Question mark. 1, bullish. 2, neutral. 3, bearish. 4, no clue. Oops. All right. Official YouTube poll is out there in the world. Speaking of bearish outcomes, did anyone see the video on either, I can't remember if it was Twitter or Facebook or one of those things, of the bear attacking the mountain climber? Man, that was pretty intense. That was pretty intense. There were a ton of memes going around about, bears of 2022 getting like smacked off the mountain or whatever because of the rally from CPI or whatever, but that was an intense video. To be attacked by a bear while you're pretty much free climbing a mountain up towards the peak, goodness. And it was a black bear, I believe. It wasn't a big grizzly, but black bears are fast, right? Black bears are real fast, and this thing was coming in and out and trying to attack him, and he was yelling at the top of his lungs. I've had a couple of bear encounters in my life, 2 to be exact, and a mountain lion as well. But goodness, like I saw him in passing, and pretty much we kept our distance, they kept its distance, and we were all set. But to be that up close and personal with a black bear, I'm all set. Yeah, baby black bear that wanted to play. I2IS1. You're welcome to play with a baby black bear. But I'll keep my distance. I'll keep my distance from both the black bears as well as the mountain lions. What state do I live in? I live in New England. But I live in New England, but it was when I was out actually hiking in New Mexico. When I was in New Mexico, spent 2 weeks backpacking through New Mexico, and that's when I saw both bears and a mountain lion. So a little bit of insight. Anyways, that's going to pretty much bring us back to the poll results. So thank you, everybody, who are participating in the poll. I'm going to scroll back up and see what we've got for responses here, and then we'll continue on with our analysis of the NQ. Quick reminder to just hit the thumbs up button if you do appreciate the stream thus far. We've been hitting some resistance around the 400 mark most days, so let's see if we can break that resistance. But anyways, jumping into the poll responses. Wow, I've got to go far up. Lots of poll responses here this morning. Cy with the number 1 to kick us off. Lioness with the number 1. Rose with the number 1. MC with the number 1. Randy with the 2. Ross with the 1. Lots of 2s and 1s here. I haven't seen a single 3 just yet. No 3s, no 3s, no 3s. Where's our first 3? I know we've got to have 1. There's always going to be 1. David Y is technically the first one who includes the 3 in the outcome. 2 to 3. 2 to 3. So neutral to breakdown later on in the day, possibly. Same thing from INF, but in the reverse. So a 3 that turns into a 1. Mr. Oso makes sense that the bear is dropping a number 3 as well. And Sam as well with the number 3. After that, though, just 2s and 1s dominating the chat. A couple more 3s towards the bottom here. We've got Mr. Prayer, Hector. Who else? Todd with a 3. So a couple more 3s towards the bottom. But anyways, it does seem that the chat is mostly on board with a rally, so some sort of continuation or at least digestion of this gap going sideways and holding up at the highs, which does strike me as fairly interesting. Yeah, shorts do appear to be trapped from Empower. I would agree with that sentiment. That yes, shorts do appear to be trapped, and we're seeing the result of that, honestly. So cool. That's what I've got for us on the poll results. Nick Farrell, thank you so much for joining as a super supporter. Greatly appreciate the support. Things like that definitely help to, again, buy the new monitor that I got the other day, upgrade the microphone come the new year. That's the plan, to get one of those podcasting Shure SM7Bs. So thank you so much for that. It is greatly appreciated and goes directly back into the channel. And that's that. Any other questions, comments, concerns before we get into our NQ? Any other questions, comments, concerns? New England's a state? No. New England is not a state. I would just prefer not to indicate directly where I live. Yeah, I've hiked Mount Monadnock plenty of times. Born in Hartford from Brian. Go Whalers. Absolutely. Absolutely. Cool. All right. That's it. Let's get into the NQ. Yeah, Siva, you know exactly what was going on when I said New England. NQ, here we go. NQ. Let's see. Aren't we going to be overbought on the 30-minute and the hourly for the S&P from Mr. Prayer? It's possible. It's possible, but remember, markets don't, you can be overbought, you can be oversold. Don't you think that this was oversold and then it continued to sell off, right? And then, dare I do it, but don't you think that this was overbought and then it rallies again even more and then even more into the close? I mean, so overbought and oversold doesn't really mean a whole lot on in this market environment. So that's all I would say about that. But let's fire up the NQ. I just want to adjust this overnight high, and then we'll go up to the higher time frame structures here. So 4-hour chart, what's going on from the 4-hour perspective? Taking a quick look. 4-hour chart, here we go. So the NASDAQ had been much more bearish than the NQ simply based on its location in relationship to this range, right? We know that the daily balance range rejected here for Friday's pullback, and then yesterday we just kind of put in that weird inside bar, didn't really do anything on yesterday's session. So now we're gapping up and into the prior range. So again, shorts getting hurt. And I also think, there's another saying, we were talking about a saying earlier that what was it? I can't even remember what the saying was. But anyways, the other saying that comes to mind here is that a bear market makes fools of bulls and bears alike, right? A bear market makes fools of bears and bulls alike. So sure, shorts are getting hurt here, but if people long this, smack it long on the open and it pulls back, then, now we're getting longs that are hurt, and everybody's just kind of like, what the heck, market? Come on, give us some actual trading activity. So anyways, ES looks much cleaner. The ES is moving outside of the balance range to the upside, right? The NQ is kind of set to be opened right in the midpoint of this balance range on the daily time frame chart. So I would say that the NQ is probably one of these things that you want to, err on the side of caution in the NQ. To me, the NQ would make more sense to see an aggressive pullback to the bottom of the balance, close the gap, or at least come into this structure. The gap closes technically down here. Come into the structure at 11.2 and then turn around, or rally to close the overhead gap, because remember, we still have an unclosed gap from here to here. Rally to close this and then reject off of that for a higher low pullback on the hourly chart, right? So 4-hour structure, yes, we've got lows, high, higher high, but there's still the possibility that this is a lower high from here to here. So 4-hour trend has a lot more work to do before it even comes close to neutralizing the trend. Like the ES can rally on an equivalent basis to this box and neutralize the trend on the 4-hour. The NQ can't do that. The NQ has to go much further up towards what? Roughly 11.7, right? 11.7 to neutralize the 4-hour. So that to me seems like a stretch of the imagination for today's session. Wouldn't be my first thought that, we do something like this, right? So NQ would seem like the two major targets you should focus on from the higher time frame structures are the top of the balance, roughly, what is that, 11.5. There we go, 11.5. 11.5 on the upside to close the gap from this down or back here. Or downside is pull back and put in a higher low at the bottom of the daily balance at 11.2. So 11.5 and 11.2. That's the focus based on the higher time frame. And again, the higher time frame opening in the midpoint of this range, to me, is like you don't really have an edge here. You've got possibly the gap fill overhead that gets interesting, but to the downside, overall, usually you don't really get active at the midpoint of a range. You get active on the edges for mean reversion, or breakout, breakdown, right? So that's what I would say about the 4-hour here on the NASDAQ. Let's go hourly and see what's happening from this perspective. So again, on the hourly, your uptrend's a little bit more well-defined. You've got the higher lows. Yesterday was just consolidation balance up here, so you've got higher high. So uptrend on the hourly, yes, checks out, more bullish on the hourly as opposed to the 4-hour structure. Looking at the chart here, we know that, again, all of this is unfilled gap. So gap rules will be in play in the NQ. Remember that we can't pick and choose when gap rules get applied, but we can be a little bit more cautious on how aggressive we are with trading them when we know the context of the gap is how many points is this in the NQ. Let's just round up and call it 400 points, right? Roughly 400 points in the NQ. Not quite. Let's go 300. 300 points, excuse me. Right? So a 300-point gap up, that's really sizable. Pretty tough to trade something like that. But again, gap rules will be in play. What are the gap rules, you might ask? Well, 15-minute time frame. Here we go. Anything that opens here fails to accept over the overnight high and then trades lower through the opening print. Look for some short side activity to correct the overly net long inventory in the pre-market and come into the bottom of the daily balance. Okay, bottom of daily balance is this gray bar right here. Remember that was roughly that 11.2 number, which you can see, boom, boom, right? 11.2. So 11.2 on the first pullback, that would again produce a partial gap fill. So remember that partial gap fills are pretty bullish. Partial gap fills are pretty bullish, right? If the sellers were going to quote unquote finish the job, they should close the gap all the way because there's not really much structure in this area. So if that doesn't happen, then sellers are weak, buyers can step back in, and maybe we reverse back up towards the opening print. Remember, this is a really large range, okay? Manage your expectations. If we don't get all the way back to the open, it's okay. It's not the end of the world. This is a very large range, okay? So I know our minds have been warped from the CPI nonsense that happened at the end of last week, but think about the trading range from yesterday. Really, really tight and compressed and narrow, right? So if the market does this all day, don't be surprised. Right? If the market pulls back and then does this and tries to climb into the afternoon, but it's just moving at a snail's pace, don't be surprised, right? So that's the partial gap fill situation down to 11.2. Full gap fill situation obviously is to your prior high of day, 11.150. That is also still bullish because it produces a 1-hour higher low, right? From here to here, higher low, 4-hour trend, not quite neutralized just yet, but hourly still remains bullish if we higher low off of the gap close. Those are the bear scenarios early on to trade, right? So that's tradable downside. It's not really like big structure changing shifts from the hourly perspective, but tradable to the downside, right? If we don't do that, if we just accept above the overnight high, I would not get in the way of this thing. I would not try to short this unless we're underneath the overnight high and underneath the opening print, right? Those are the two situations that you kind of need for a short to unfold here in the NQ. So if we do accept above, maybe we just rotate through the top of the gap, and that target's going to be closer to your 11,500, right? 11,525 is technically the number for the gap close. 11,525, okay? 11,525 on the upside. 11,200 here, and 11,150 on the full gap close. Those are the areas of interest that I would be focusing on today's session. Do keep in mind that we've got NASDAQ internals. Oops, we just fired up NYSE, but let's go NASDAQ. So for anyone who's not aware, we've got the NASDAQ internals here. It's almost the same as the ES. It's very close to the NYSE, but you're just going to want to watch your NASDAQ breadth. Can this get closer to one-to-one reads on the open? If we can't do it, because I would imagine we open somewhere at like 7 or 10-to-1 positive on the NASDAQ, if we can't get close to that one-to-one, if this doesn't back off on the opening print, gap probably won't close. Here's the tick in the NASDAQ, right? For anyone who doesn't know what these symbols are, we've got the VOLQD is your NASDAQ breadth. The tick is just the same tick, but /Q at the end. And the advanced decline line is the ADQD in the top right-hand corner, right? Ticks will be the same, though. Same idea as what we discuss in the NYSE, right? These are likely going to be opening somewhere here. Very aggressive on the bull side. We've got to get at least to 1,000, if not zero line. If that doesn't happen, if the ticks in the NASDAQ can't get to the zero line, the gap won't close in the NQ. The gap will only start filling if we get some zero prints on your tick. Okay? That is that. That is that. That's that for the NQ. That's that for the ES. We've run through both situations in both of the important broad market indexes. Now let's take a look at the Russell. All right, so here's the /RTY. All the keys are next to each other on the keyboard. We know that by now. Let's take a look at the 4-hour chart. What's going on 4-hour in the RUT? The RUT 4-hour is already neutral. The Russell 4-hour is already neutral. Why is that? We've got the equal high. I would even venture to say that this is slightly like, I would go and put a little up arrow on the end of our neutral tilde there. Why is that, you might ask? Well, number one, it never made an aggressive breakdown of the June lows, right? Remember that this held the June lows. Number two, you've got a higher low in place already and a higher high from here to here. So yeah, hourly uptrend is definitely going to be in place. Hourly is definitely feeling bullish, but the 4-hour is already well on its way. We've got the neutralized equal high. If the Russell breaks out, I just want to point this out on the higher time frame first, the next target is up here, right? Close to 1820. 1820 in your Russell. And this has been a leading indicator for the market. The Russell certainly has been a leading indicator for the market. This was the first one. When it didn't break down on CPI, it held the lows from here, held the June lows as well. The next one was that here's the daily balance area, right? We broke out of that, and now we're back up towards these highs. Leading indicator for the market here in the Russell, okay? So it doesn't mean that, the Russell is a savior and it's just going to continue to move in the upward direction, but it's something to at least consider and factor into our analysis. Here we go on the hourly structural chart. What do we have? Yes, higher lows in place, higher highs in place as well. Uptrend here intact on the hourly chart. Anything else we should be mindful of? There might be you could make the argument that on the hourly, this 1750 zone right here is also important structure. So this low of day from yesterday, 1720, is the top of the daily balance, but you could also make the argument that we do have some important structure coming in from support, kind of got hung up there, but really cleanly support in here, then breaking down in the pre-market, right? Rejection point underneath it, little hang up in the pre-market, right? So you could make the argument for the 1750 zone. So if the RUT pulls back aggressively, gap fill reversal off of this area would make more sense to me, right? There's nothing in between for the partial gap fill where I would say, oh, okay, that's, whereas the ES and the NQ have like a level kind of in here, the Russell doesn't have that, and it would make sense to me that a full gap close here would preserve and be fine. Okay, so that's what I've got for you in the hourly structure. Let's take a look at the 15-minute chart on the Russell and see what's taking place here. So the gap obviously is still in play. We're gapping into this overhead supply, the top of that range that we just saw, right? We're making that 4-hour equal high. So would it be reasonable to see a pullback here? Yeah, it wouldn't be the end of the world. We know that the hourly structure still remains bullish over 1750. That's fine. So again, use your gap rules. Anything that fails to take out the overnight high, moves underneath the opening print, looking for a short to close the gap. As long as this risk reward makes sense, you've got a 2-to-1 at minimum, then fine. There's a short to be had there. Don't overstay your welcome if the ticks don't get to zero. Don't overstay your welcome if the breaths remain really positive on the morning session. But that seems reasonable to me here in the Russell. Okay. So that's the gap fade for the rut. If we just continue higher and get price acceptance above, then we know that our next target that we just pointed out is closer to 1820 from the higher time frame structures. All right, that is your Russell. Let's take a quick peek through the sector list, and this is going to be very brief, so bear with me. This is very important, guys. I know a lot of people tuned out yesterday when we started moving through some sectors. This is important because if you know what the heavyweight sectors are doing, it's going to keep you on the right side of the trade. Real estate, lightweight sector, not going to read into it too much, but gapping up, bullish. XLY, heavier weight sector, definitely worth reading into. Big move, up and over 140.25. What do we know about that level? It was the breakdown point from here. It was the rejection point from Thursday of last week, right? So to be gapping up so firmly above it, it means that the hold over 145 on a higher low could be in play, which does strike me as a bullish look. If we reject 145, okay, neutral in the market. XLC, what's going on in communications? Much more bearish, right? On a relative basis, it was playing around down here at the lows. Where are we opening? 50, let's go 50.33. 50.33, we're not quite above the neckline of what would be a weekly double bottom. So kind of more neutral here in the XLC. XLV, very important sector. This is one of these ones. This is one of these ones. These are one of those thems. I don't know what I'm saying, but this is one of those sectors that you need to pay attention to. This is the second heaviest weighted sector of the S&P 500, and to see it back above 125 is a step in the bullish direction. To see it gapping up towards literally as I was about to say 128, got a big move down towards 127.50, about 50-cent move there. But regardless, to see the move, hanging out somewhere up here now, are we starting to resolve this balance area to the upside? Certainly seems like a reasonable possibility given that the gap up is so large. Even if we fall and the market feels nasty, if we put in a higher low somewhere in here above 125, steps in the right direction. That is bullish for your S&P 500, no doubt about that. So XLV will be one of these important sectors to watch to make sure that we at least get a gap fill reversal and stay above 125. If we fall underneath 125, kiss the market goodbye. More volatility to come, just nastiness. XLU, lightweight sector, gapping up, fine, bullish. XLK, heaviest weighted component of them all. What's going on here? Are we above our 122.20? Yes, we are. We're gapping up over 122.20. We're back inside of this balance area, the original balance area from right here. That does strike me as a bullish indication. Now, the concern here is that if we pull back to close the gap all the way, we're giving up 122.20. So rainbows and butterflies, pullback holds here, gap fill reversal, bullish in the broad market. No doubt about it. If we hold 122.20, bullish in the broad market. If we move all the way to the gap close at 121, a little bit more neutral. Bullish edge, but a little bit more neutral. Okay, so worth paying attention to in your XLK. Materials, lightweight sector, not going to spend any time there, or on industrials. Both of them are just gapping up. Status quo on those. XLF, financial earnings, right? Seemingly good here. 1, 2, 3 bar play. It's really not a 1, 2, 3, but big CPI result. Held the 31. This is kind of like, this one was in the driver's seat. The fact that this did not fail back down into this range here, really, really solid move out of the XLF. So a little inside doji, obviously produced a solid gap up here this morning, so not really that tradable, but the breakout does seem meaningful. Where are we? We're back up at this 32.50. If we can get above that and spend, more time consolidating above, then fine. Your weekly double bottom is triggering up and over that neckline. That does strike me as a bullish look for the market. It would be reasonable to see a little bit of inventory correction, but you want to make sure that we just close the gap and stay above 32 at this point in time. Okay, that would be my line in the sand for the XLF today. 32. 32, 32, 32. All right. Next up. Excuse me. Next up. There we go. XLP, consumer staples. It's not quite as a lightweight sector as your XLBI or real estate. However, it's D for defensive. It is lagging everything. Notice how it's here, just barely above this, instead of like gapping up somewhere here. So to me, decent look out of the XLP. And last but not least, energy. How are we doing? Inside of range. Guys, we couldn't have asked for a better open here in energy. I mean, this open here this morning does strike me as very tradable, very playable, namely for bullish outcomes. I know we talked about bearish outcomes on the gap fade for the move lower, but energy staying in range. The gaps where it's meaningful, XLK, XLY, XLF, XLV, I mean, many things are repairing structure, or at least getting over critical structure to the upside here, and energy is stuck in range. That's exactly what you want to see from a risk-on, risk-off perspective. Okay, so I like what I'm seeing here on the open, based on where the opening prints will be. It's all about how that structure continues to unfold when the regular trading hour session opens, right? When the bell rings at 9:30. So here we go. Here are the cash index equivalents, SPY. What are your levels to be watching out for? Here we go. Daily time frame chart. We're opening here above this gap, which is also well above the weekly expected move. Okay, so that would be another data point, being above the weekly expected move, where I would say, okay, maybe it's more reasonable to look for that gap fill on the open. Even if you just want to trade, not for the full gap fill, but just for the double gap right here, where there's virtually zero structure, that would be reasonable based on being extended from the weekly expected move. Okay, so your numbers to pay attention to: overnight high, 375.30, and then your gap close starts from 372.65 down to 370.34. 370.34. Okay, so if we make the move lower, something that looks like this, I would watch for some support here. Also, you would be finding support at the top of the weekly expected move, which seems reasonable based on, that's what the options market was pricing in. There are positions here, right? So that's your SPY chart. Anything lower than that, obviously, you're looking for the full gap close, and that's going to be around 368 prior high of day. Okay. Any further acceptance inside the prior day's range, to me, that's much more bearish. We will shift our tone if we're accepting back inside of the prior day's range, because that would be a move from looking above the entire top of the daily balance, right? That would be yet again another move above, failing back down and accepting in that range. Look above and fail. Volatility continues, neutral, question marks, okay? Nasty market if that's the case. We're hopeful that the market might want to give us some type of trend. So these pullback areas are kind of ideal to be watching, okay? That's your SPY. Next up, QQQ, NASDAQ 100 cash index equivalent. What's going on over here? So this, as we know from the NQs, is different just because it's underneath, and it had spent much more time underneath the bottom of the daily balance. You'll notice that we're opening inside of that overhead gap here around 275. So we don't have the same situation to trade for on the downside as what we have in the SPY, but this does have relative weakness because the SPY is opening up here, the QQQ is opening right around in here, right? So that being said, your pullback area to firstly pay attention to is 272.65. 272.65 in your QQQ is where I would pay attention to first. It's also the pre-market pullback, right? It just makes sense based on the daily structure as well from here. So that's your first fade area. Watch for a reversal off of that. If that doesn't happen, I would watch for the prior high of day, 270, and a reversal off of that. If neither of those happen, then again, bears just remain in control, giving us a big daily lower high, something in here, fake out, right? Move back down into the prior day's range. Maybe we dribble lower over the course of time. So really, buyers got to prove themselves here today. Otherwise, the daily structure just remains down in the QQQ. You can clearly see that the SPY is much more bullish, right, based on a relative projection. We've got 9:25 on the clock, and we're barely through the broad market. But anyways, very cool. Breeze through the core list of companies, and then we've got a skedaddle whenever we've got a gap up. So anyways, IWM. What's going on here, right? Where are we opening? Opening up towards this area here. So weekly double bottom not quite triggering. That's obviously 177. Patience. But for now, as we discussed, we never got the big lower low. We got the equal low. Now we're trying to put in some sort of price acceptance above this as a balance area, which does strike me as bullish. So what do you want to watch for? Any pullbacks here that hold up? I would even say even further than the prior high of day, 172. Any holds of 172 in IWM, bullish for the overall daily structure. 172. As long as that holds, maybe we get something that looks like this and we move higher into the future to test that weekly double bottom neckline 177. All right. So that has been the broad market. We will quickly flip through some core list companies here and see if any interesting gaps are taking place. Apple's a tricky one, right? Because we're opening kind of in this no man's land here, the midpoint of this prior balance. So be mindful of that. Gap fill reversals, obviously bullish off of the prior high of day or just 143.40. Next up is Netflix. Earnings after the close. Wouldn't touch this one today just based on that. Tesla, very interesting here because we're gapping up and over all of these rejection points around 221.50. I would carry forward Tesla should be a long watch for shorts getting squeezed ahead of a possible pre-earnings run-up. Right? So Tesla carry forward as a long possibility today on holds of 221.50 on pullbacks or anything that just remains bullish, gap and go. Next up is Google. Google, how are we doing? 103 on the open. Yeah, okay, Google could be in play. Weekly double bottom neckline, right? 103. So I don't know that I would prefer to long Tesla over Google based on the structure. So Google, possible gap fill reversal. That's what I would watch out for as a more tradable situation. Meta, how are we doing here? Gapping back up into this range. So look below and fail possibly. Holds of 134 on the pullback. Bullish into 141.65. NVIDIA, pushing it on time. NVIDIA, bullish. Yep. I would stay away from NVIDIA. I think that the Tesla and Meta are both better than NVIDIA. Microsoft, getting into the gap overhead. Microsoft is tradable because of this gap overhead. 241.30, 246.15 are your levels to trade for. If the pullback does unfold, you want to see it support here first. 241.30, that is like the ultimate bullish outcome for a reversal off of that level. Otherwise, it's just 239, prior high of day, full gap close to the downside. But this strikes me as an interesting setup or possibility as a bullish setup as well. Amazon, last but not least, the mini beast. Let's see, 118. Excuse me. I think that the Microsoft trade looks better than Amazon. I don't really like what's going on here and here. So Microsoft, Meta, Tesla, long watches, shorts, I would probably just look to fade gaps in the ES and the NQ. All right, that's going to wrap it up. I've got to get out of here, get the future screen set up. Thank you so much to everybody who tuned in. Thayer, if you just scroll back on your time player, you'll catch a full explanation of the gap fill reversal. All right, that is going to do it. Thank you so much for tuning in. If you're not in the Discord, get in the Discord. We'll be giving you updates on the ES internals on the open here. With that being said, everybody, I wish you a great and green trading day.